Now, ever since Russia invaded into Ukraine, the Western strategy has been to cripple the Russian finances, for which the West, of course, led by the United States, imposed one sanction after another. And although the ruble did tumble in the initial days of the war, it managed to bounce back. But now the ruble has begun to slip again. Since this morning, the ruble has been trading at almost about 100 rubles per dollar. In fact, the ruble has now been dubbed as the third worst performing currency this year. So what factors have resulted in this meltdown of the ruble, and what does it mean for the Russian war in Ukraine? Take a look.
Nearly 18 months into war, the economic consequences are catching up with Russia. The impact is evident on its currency. The ruble is at its lowest since the war began. The Russian currency is at 101 against the dollar. It has declined by some 25% since the beginning of this year. Russia's current account balance had fallen to $5.4 billion in the second quarter. It was a year-over-year plunge of a whopping 93%. Do you know what this means? The shrinking number suggests that Russia's exports have taken a hit. For a country heavily reliant on export of commodities such as fossil fuels and grain, this is not a good sign. In December, the G7 group imposed a $60 price cap on Russian oil. The value of exports has slumped ever since. Russia's earnings were 15% lower in dollars from January to July. As the government executes its war, Moscow's military spending has skyrocketed. Imports have surged. Western sanctions weigh heavy on its energy exports. The fall in currency was a long time coming. The Russian central bank emphasized that it saw no risk to Russia's economic stability. But only a few hours later, it called for an emergency meeting. It also jacked up the interest rates to 12%, showing a jump of 3.5 percentage points. If there was no risk, what explains this move? Is Russia trying to save face? Last year, around this time, the ruble was worth 60 against the US dollar. Today, it's far cheaper. It's become the third worst performing currency of the year. It's now in line with perennially troublesome currencies like the Argentine peso and Turkish lira. How weak are these currencies exactly? Let's see. A year ago, you needed only around 100 Argentine pesos to buy $1 US. But now, $1 accounts for some 350 pesos. In the black market, it exceeds 500 pesos. Argentina is battling its worst economic crisis in years. Inflation reached 109% in May. The central bank's benchmark interest rate sits at 97%. The Turkish lira also shows a similar trend. To buy $1 US, you would need 27 lire. 5 years ago, just 4.5 lire would do it. The currency value has been eroded by 80%. 2 months ago, inflation had officially hit 40%. You see, Argentina and Turkey's economy have been troubled for years. What else would you expect from their currencies? Russia, on the other hand, has remained a superpower. Now, the Russian ruble has stooped so low that it is being compared to pesos and lira. That's what a year of war can do to a country. Sanctions and capital controls have isolated Russia from the international financial system. The fate of the Russian economy depends not on international financiers, but on the depths of Putin's aggression. And the end seems nowhere in sight. Bureau Report, WION, World is One.
WION is now available in your country. Download the app now and get all the news on the move.